Good morning and welcome to the VSA Morning Miner. I'm Ollie O'Donnell and I'm joined by Paul Renkin. Today is the first day of the Shanghai Mining Club conference and Andrew's busy moderating. So we've just had the first session. I think they're in a break at the moment, moving into the next one. Paul, how are you though?
I am well, thank you. And yes, the conference has a fine lineup of companies there, so it's really interesting presentations.
Yeah, exactly. What news is out there outside of the conference?
Well, I wanted to speak first of all on the news out from Hochschild, the base metals producer in Latin America, which is listed in London. They've announced they're to spin off their 80% owned rare earth subsidiary called Aclara Resources into a separate company, probably for a TSX listing in due course. Aclara is a resource of the ionic clay type, which is the kind which is mined in China, incidentally being explored at the moment around the rest of the world, including places like Uganda. But this one is of that clay style, and it is intended to be separated from Hochschild to not confuse the two stories and essentially allow them to progress their corporate stories separately. Particularly a good time for the rare earth space when we're seeing such high prices now at this point.
Yeah, well, I think it'll make it a lot easier for the market to value that side of the business. Rare earth isn't easy for investors to get their head around, so having it as a separate entity will no doubt make that more straightforward.
Yes, I think so, and it'll be interesting to see just what kind of size they can put together on this particular thing too, because there is no rare earth production in Latin America that I'm aware of. So, other than some monazite sands, which get shipped from concentrates now and then, but anything that contributes to the outlook for rare earths in Latin America will be good for the industry.
Yeah. Anything else out there, Paul?
Yes, we had some really interesting drilling results back from Rambler Metals and Mining. That's the copper gold producer underground in Newfoundland. It's listed on AIM. Their drilling in the footwall zone here has come, that's an existing ore body in the Ming mine underground, but the new extension drilling has come up with some really exciting results here. Looking at intervals like almost 10 meters at almost 3% copper, and also some intervals in here like 49 meters at 6% copper in one of these holes here, which is really spectacular. Now, this is significant because the Ming mine has been struggling with its operating margins for a little while now, trying to find enough better grade material and make it be profitable. But these grades are about 3 times higher than the overall grades within the deposit at this point. So they are going to proceeding right away into another drilling round here in Q4 of 6,000 meters and 15 holes, just to see how much more extension we can get on this position. Because if there is a significant volume, this would be a game changer in the operating costs.
Excellent. Well, yeah, they are some pretty spectacular drill results you've mentioned. Look forward to seeing some more. We've also got some a return to record highs across some other metals. I think aluminium, tin again testing its highs. Aluminium looks like it's being driven by a shortage of magnesium. So, Paul, do you think we're going to get a whole load of lithium projects turning themselves into magnesium projects over the next few months?
Well, I suspect not actually, because magnesium is not a rare metal or anything like that. It occurs everywhere. I mean, the rock dolomite is a magnesium carbonate, so there's plenty of magnesium to be scavenged from other resources. But we did get this information out also today by London-listed RHI Magnesita that they had put out a profit warning because of the power curtailments in China affecting refractories production, even as they've been able to implement some cost increases because the demand profile across refractories is looking quite good here as well. Yes, just interesting times we're looking at on supply and demand, deliverable supply fundamentals across the raw materials.
Yeah, I mean the sort of takeaway I think is that if you're looking for miners to avoid supply chain issues, you need to be looking at companies which are producing a near final product. You know, SXEW copper producers that can produce a 5/9 product, or precious metals producers producing doré high grade concentrates that don't need significant refining, and aren't subject to treatment charges, refining charges that are likely to probably increase over the next few months if smelting capacity starts to shut down on a wider scale.
Yes, and some of the operations too that have been the quantities of a byproduct that hadn't been worthwhile to recover before may now get reconsidered in some of these polymetallic deposits too, simply because by putting in an additional leaching circuit or something like that in the mill, it becomes a payable.
Okay, Paul, I think that's enough for today. Thanks for your thoughts. We'll speak to you again tomorrow. Cheers.
See you then.